The record run continues on Dalal Street as Nifty perches itself above 13,000 level. Let's do a three-point analysis to find out if the time is ripe to book profits. 1. Nifty Tops 13K, up 73% since March. Well, it's been a one-way move for the benchmark indices, and that is after the March lows. Nifty index had seen its worst showing in more than 4 years when it actually sank to 7,511 on March 24th amid fears of economic and earnings loss. Now, the Sensex and the Nifty scaled fresh peaks of 44,600 as well as 13,079 in intraday trade yesterday, that's November 24th, as investor sentiment got a boost due to the positive reports around COVID-19 vaccines. Now, in the last few weeks, we've already seen 3 to 4 vaccine candidates which have shown a lot of promise in the final trials. The news that has actually brought all around cheer even as the COVID cases continue to climb. Now, other than the hopes of the vaccine, abundant liquidity, better quality earnings, also improvement in economic data, and the government measures to shore up the economy have altogether supported the market's ascent this time around. 2. What's the road ahead really? Well, if you see, experts say that at this record high, the markets definitely risk correction as the valuation has to be in sync with the macroeconomic reality as well. Now, while there may be some correction in the near term, analysts are still positive for the long term with respect to markets. Now, weeks ago, global brokerage house Goldman Sachs had upgraded India to overweight rating and raised Nifty's 2021 end target to 14,100. Global brokerage firm Nomura had said that Nifty may hit 13,640 by December 2021. Brokerage firm Prabhudas Leeladhar is also quite bullish on the Indian markets and actually expects Nifty to hit 14,407 in a 15th month time frame from now. Also, the brokerage firm values Nifty FY23 EPS of 724 at 10-year average PE of 19.9. Now, in the bull case scenario, Nifty may actually even touch 18,000 mark. That's what the brokerage house has said. 3. What should investors do then? Well, experts say that with the November expiry just around in 2 days, the index could actually accelerate by 150 to 200 points by Thursday. They also say that any spurt in the US markets could also be a big catalyst in the further rally in Nifty 50 in the coming days as well. Now, Binod Modi, who's the head strategy investor at Reliance Securities, he has said that, however, valuations at these levels do look to be quite stretched at this point in time and definitely calls for some caution, as any let-up in terms of earnings growth outlook may definitely result in meaningful erosion of value. Meanwhile, other experts have also advised investors to book profits partially and sit on a 15 to 20% cash in their portfolios, suggesting that any corrections also in the market can be used to deploy further funds at lower levels.